this is Dave Uhryniak. I'm coming to you live from New York City on Zoom. I know it's late in the day in Istanbul, and you probably had a long day of presentations, but thank you for sticking around. This is definitely going to be worth your time. With that, I'm going to share my screen. Now, what we're seeing in Web3 certainly isn't going to take 127 years. It's moving much more rapidly than that, but it will take some time. And that's what I'm here to talk to you about today. I want to look at the drivers that are needed, that will occur to drive adoption of Web3. So what we're going to talk about, we're going to get a little bit into the TRON highlights, because we have been really doing quite well. We're going to define what Web3 is, because you can't talk about anything before you really define it. Then we'll deep dive into some of the drivers of Web3 adoption, and then we're going to wrap it all up. But first, TRON, we have really actually been doing quite well over the past year or so. We've done over 5 billion transactions, have over 145 million accounts. Some highlights: we surpassed Ethereum to become the #1 chain hosting USDT circulation. To host USDT, we launched the first ever reserve-backed, over-collateralized, decentralized stablecoin. And the first transparent crypto reserve was born, TRON DAO Reserve. We became the #2 chain hosting USDC. Our TVL has been booming, and we might even be the second largest in TVL at this point. And right now we're probably around the 13th largest blockchain in the world by total market cap. So we've been working hard over here to make our chain just be the best as it can be. And really, what we've turned our chain into is the stablecoin superhighway. So let's take a look at these graphs for a minute. So the graph at the top looks at the dominant protocol by geographies. Blue is ERC20 and red is TRC20. And as you can see, TRON has significant presence throughout the world, right? From South America, Africa, APAC, even Europe, Middle East, Africa. We really do quite well. And now, I'm sitting here in New York City, and we're growing our ecosystem here as well. And, we don't necessarily need to be or think one chain will be the dominant, but, we do want to drive more adoption of TRC20 throughout North America. And when we look at moving to the other graphs, right? So just looking at transactions, TRON has really become one of the dominant chains in the dominant chain in stable coins, and our monthly active users is really continuing to grow. I think all these numbers really don't reflect what's gone on over the past couple of months, certainly with USDC and that situation and everything else. So we've actually surpassed all of these things now, and now we continue to grow, and our volume of Tether is at all-time highs. So, TRON is definitely, we're making our mark as one of the, if not one of the dominant players, if not the dominant player in payments. All right, so with that, let's get into defining Web3 a bit, right? So we all know what Web 1 was, right? It was just read-only, but it was decentralized, believe it or not. Then we went into Web 2, and it was good, but you could read and write, but then it became centralized among a few large platforms that controlled everyone's data. And for a while, everyone liked it, and even now, there's still, I think, it's still dominant. But I think people are waking up to the fact that they should control their own data and their own information, right? And Web3 facilitates that. It's a read, write, own model, right? Web3 is built on blockchains, and that's really what's going to be the difference, because blockchain is the foundation of Web3 and provides users with myriad new capabilities, right? And what are some of those capabilities? It's secure, much more secure than without blockchain. It's censorship proof, which now today is really needed more than ever, because what we're seeing really around the world are many of these governments continue to want to censor what's going on in or what's being talked about in social media even. I mean, recent revelations in the US from Twitter and Elon Musk really highlight that fact. Blockchain can be ubiquitous and it's open and accessible, right? It eliminates the gatekeeper intermediaries like, well, whoever it might be. I don't want to say anyone's name, but I'm sure you all have ideas of who those gatekeepers might be, right? And I think one of the most important things is a secure peer-to-peer data exchange, and that data can take many forms. And I think really one of the things TRON has done is really enable people around the world to transact with each other in low-cost, in the lowest cost possible ways, so they can send small amounts of money and not have the bulk of that transaction eaten up by fees. And that's another reason for our broad adoption throughout more of the emerging parts of the world. It's because it's reliable as can be, it's low cost, and it's fast. So now let's get into what's going to drive the adoption of decentralization and additionally Web3, right? So overall, we're still very early in the adoption cycle. So if you look at this, these two charts look at where crypto users relative to internet users. And the first chart is, I believe that's a log scale, just looking at the growth in crypto wallet users in the millions and the number of internet users in the millions. And as you can see, crypto wallets really even outpacing the number of internet users or the growth of internet users. And at some point they'll converge, but for right now, I think the number of wallet holders will continue to accelerate. Then if you look at the second chart, kind of looks at the same thing in a different way, looking at the race to 1 billion users, so to speak. And we're still very early in adoption of Web3, very early, but we're definitely on pace, certainly a pace that is comparable to internet users, actually trending a bit above, which is really positive. So, anyone saying Web3 isn't real or it's in decline, they really just don't have the facts to back that up, right? And even with, when you think about it, I think crypto is outlawed specifically in 8 or 9 countries, and then kind of stealth outlawed in a bunch more. And now even the US is kind of the U.S. government has taken an adversarial position to crypto, and it's still getting adopted. It's still being adopted. It's still growing, and I think that growth of an alternative ecosystem, growth of an alternative payment structure, scares governments around the world, and that's why they're coming out so strongly against it, in my view. So now let's look at the adoption catalysts of Web3. And I think there's going to be 4, and you can put this into these 4 buckets. The first catalyst is what I call global personal capitalism. right? What this is really is the ability of people around the world to monetize, to control and monetize their creations, their activity, and their personal information, and benefit from that information, right? People are taking back power from the intermediaries and from everyone else who controls their data without their permission. The second catalyst is going to be business model evolution, right? This is going to be driven by traditional business principles as well as consumer demand. Thirdly, blockchain is rapidly being integrated into adjacent technologies. AI is one that really, I'm sure, jumps to mind. It certainly does for me, and certainly probably most of you as well. And then also the expanding value proposition of blockchain technology and Web3 overall. So let's dive in a bit more deeply. Let's talk about global personal capitalism, right? Like I said, it provides consumers with the capabilities to protect and monetize their information, their activities, and creation, right? And this really comes down to three things. It gives users back personal property rights, right? So, and this applies to everything you do online and everything you do offline. So anything from your doctor's visits where they create health records, those are yours. And if you want, you should be able to monetize that information somewhere if there's a market for it. All right, tokenization is really, obviously, as we all know, is facilitated by blockchain as well as, NFTs. And that's really plays a huge role in driving all of this and making all of this possible. And as as that happens, there are a multitude of market opportunities. And what that means is, from financial services to healthcare to social media to advertising, there are so many opportunities for people around the world to be able to take control of their information and monetize it, right, for their own benefit. And that is going to really, I think, alter the landscape of wealth distribution throughout the world. And I think it's going to lift millions of people out of poverty and hopefully change everything for the better. So I think this is probably one of the most exciting things for me about Web3. And really, I view this as really a return and expansion of personal property rights to the individual. Again, if you want to think about why governments might not like Web3, might not like crypto, this is part of it, right? This feeds in there. Personal property rights are the foundation of any free society. And all you have to do is look at the governments that really don't like this, don't like personal property rights, and they're consequently or subsequently, they're also the governments that are against crypto. Now, Web2, they can improve their competitive position and meet consumer preferences by adopting Web3 capabilities, right? This goes back to the business model evolution that we mentioned earlier. So adoption of Web3 technologies provides multiple benefits that improve market position. So think about, your traditional market position of any company. What do they want to do? They want to, try to create a moat around their company, around their product or service. They want to have pricing power. They want to have a differentiated offering. They want to do it at the lowest cost possible. And they want to engage their customer base to create those, kind of barriers of exit for their customer base, right? And in doing that, they want to improve their competitive position. And Web2 companies that are slow to adopt Web3 technologies will fall behind. They'll lose competitive position. And the early adopters, which you're seeing now, there's quite a few, more than quite a few. They're going to gain advantages, and they're going to take advantage of this situation, and they're going to come out ahead, and they're going to increase their market share. They're going to build that moat around their product or service. They'll have pricing power, and they will be a long-term winner versus Web 2 companies that don't adopt, right? And consumer preferences are shifting as well, right? Consumers are becoming much more comfortable in the world of crypto by making payments from their crypto wallets, using NFTs and doing things, real world things with those NFTs, such as sharing and renting their NFTs and fractionalization. There's just so many opportunities there. People are becoming accustomed to using stable coins, and I don't like CBDCs, but it is on there. I don't think I haven't met anyone in crypto that thinks CBDCs are a great idea just yet. And though I'm not there with you in person, I would bet that there isn't a large base of support for CBDCs in that audience, right? And decentralized wallets. Now, decentralized wallets are really interesting because they essentially replace the need for the traditional checking account, and therefore begin to replace the need for a traditional bank, right? You can be your own bank and not worry about a run or a failure. Like, I don't know if you've seen in the US over the past month, there's been a couple of recent bank failures from, Silicon Valley Bank, and then the government took down Signature Bank because of their crypto exposure, many believe. But the point is, consumers are becoming much more comfortable with these emerging technologies and doing things even in the metaverse. And these consumer preferences are impacting Web 2, as well as the traditional business need to improve their competitive position. Now, let's move on to emerging technologies. Blockchain is great in integrating with these other emerging technologies, right? I always say blockchain is kind of like bacon. It makes everything better. So from AI to IoT to AR, VR, and mobile, and even cloud-based technologies, right? They can integrate blockchain and therefore really help further drive the adoption of Web3. And really over the last month, we've really seen this trend accelerate, certainly on the AI side. But I think really we're also seeing it accelerate in IoT. I think there's multiple, or at least I know of multiple companies here in the US that are startup blockchains that are really focused specifically on working with IoT. And really overall I think in the layer 1 space, and even the layer 2 space, you're seeing much more specialization come out among those, among many of the L1s and L2s, in terms of focusing on NFTs for certain purposes, or gaming, or IoT, or other things. And as that happens, I think you'll continue to see blockchain leveraged among or integrated into many of the other of these other emerging technologies, and as a result be a catalyst for additional Web3 adoption. And then lastly, evolving capabilities lead to an expanded value proposition. So what does that mean? It means that just blockchain and Web3 things are getting better, right? So the chains are getting better. You're seeing improvements in interoperability, which I think is probably one of the biggest things that's not only needed, but that can happen to further the adoption of Web3, right? I mean, most of the hacks in 2022 came via some type of cross-chain situation. And as that's worked on, as that's created to be, or evolves to be much more safe, that will help adoption, right? You see blockchain and NFTs and a variety of things really becoming increasingly user friendly. And that is a huge key in making all of this happen. And where you're seeing that is in the NFT space. Well, at least in the US, every major sports league from NFL to golf to NBA is doing something with NFTs. They're trying to incorporate NFTs into the whole kind of event experience. So, yeah, they're really making the user experience better. And you see that with wallets too. I think wallets have really come a long way to make it easier just to buy crypto, to spend your crypto or fiat or whatever it might be. Remember earlier in the year, in February, there was a burst of announcements about wallet linked cards that really came out. And I think and what the cards did is essentially a prepaid card or a debit card that could be linked to a crypto wallet and allow the user to pay with any of their cryptos at any traditional merchant throughout the world, right? And that, I think, was, in my view, I think that was part of the catalyst that really scared financial institutions and scared the government to say, look, we have competitive for the first time ever to our currency, and we need to really step in here before everything is lost.